If you're a new investor, you probably have been thinking about, hey, how can I buy my new home this year? So in this video, I'll walk you through 10 kind of investment you should avoid if you're new. So thank you for joining me again. My name is Wale Lawal. I am a new construction expert and a real estate agent here in Houston, Texas. If you're looking to buy real estate or sell real estate or just have any real estate question, I would say call me, let's talk. Now, I've received a lot of questions. Hey Wale, what has been your experience in terms of the kind of house I should be looking for, or what kind of the houses should I avoid? What should I be doing as a new investor? And in this video, I want to give you those 10 tips I've learned over the years or mistakes I've seen people make so you can be smart and avoid them. Number one is that you definitely don't have to overthink the process. Real estate investing can be a little bit stressful, can be a little bit risky, but at the end of the day, you do have to you have to jump. You have to make a decision to do something. Nobody can read their way through success or study their way through success. At the end of the day, you do have to pull the trigger. You have to take action and do something. That is my number one. Now, number two is that I see a lot of new investors making a mistake of not analyzing the property they want to buy beyond the first year or beyond the 6 months. Now, if you're buying rental property, the cash flow may not be very great at the beginning. As a matter of fact, in some very good market, you might be losing some money for the first 1 or 2 years to buy the property or to keep the property. But if you look beyond the year 3, you will see that that's actually a good property, and that can be happening for a lot of reasons. So it could be because there's a very high appreciating market, or the neighborhood is very, very competitive and everybody just want to live there. So I've seen new investors not analyzing the property beyond the first year that they're buying the property, and they will, pass on a good opportunity that they should have purchased. Now, the number 3 is that I've seen investors, because they are looking for cash flow, they are chasing cash flow, they end up buying in a Class D neighborhood. So Class D neighborhood are considered war zone because it's going to be poor schools, poor neighborhood, high crime area, potentially in a flood zone. And of course, the condition of the property as well will be very, very terrible. And overall, it always ends up being a bad experience for them because they keep chasing the cash flow, and cash flow will push them to the worst of the worst neighborhood. Now, even when they get the cash flow, these are just money they are saving for future issue, but they think it's a cash flow. One issue in the house, like a leaking roof or a water heater that just go bad, will just wipe out all the cash flow they think they've been saving for the last 2 years. So don't be that person. Do not buy in a Class D neighborhood. Cash flow is good, but I will tell you what is even better than cash flow. Number 4 reason I've seen is that they are neglecting the value in time versus outsourcing. Now, I've seen new investors that want to do everything on their own. They want to learn how to paint the wall, how to do the roof, how to repair the foundation, how to install the cabinets. This is not the best use of your time, except you want to do this full time. But if you're a real estate investor, it's better to outsource those things. So don't try to do them all by yourself. It's not going to yield you a good outcome, at least in terms of your time. So that is my number 4. Yeah, number 5 is that I've seen new investors listen to the noise instead of listen to the real data. So they listen to noise. If you watch the news, if you read a lot of articles out there, most of them are just noise. So you need to be able to separate what is the noise versus what is the real data. You should be looking at real estate investment website, real estate investment company to get your real data, not on the TV or on the news, because the news is just a broad overview, but you want to be very specific and go to the real estate sources to get your correct information. That is my number 5. Now, the number 6 I've seen is that new investors don't have a long-term goal. They look at real estate as a very short now or in 6 months or even 1 year down the line kind of thing. They are not looking 5-10 years. And real estate is not like stocks, so it is a long-term play. If you're buying real estate, you should definitely plan to hold it for as long as possible, except you have to sell it to buy something better or something bigger. If that's not the case, plan to hold the real estate for as long as possible, because if you look at it on the long run, real estate will always appreciate, they will always pay you more, and you will be happy, and Also, you're also going to regret, why don't I buy more real estate? That's what I always hear from people that have invested for a long time. Like, I really regret not buying so many of these 10 years ago, 20 years ago, or 30 years ago, as the case may be. So that is one thing I've seen new investors, they want to just look at right now. They're not looking beyond the year 1 or year 2. Don't be that kind of investor. Number 7 on my list is that new investors just want to do everything. They want to try every strategy they know about. They are looking at fix and flip, buy and hold, wholesaling, creative financing, apartment syndication, buying land, development. So as a new investor, you definitely need to narrow down into one strategy for at least 2 years. Don't try to do it all. Trying to do it all is trying to do nothing. And I've seen this over and over, because they want to do like 5-6 strategy at the same time. They never get any traction, they never get any momentum. And if you talk to them 1 year down the line, they are yet to close on one property. The reason is because they are looking everywhere instead of them to narrow down their search into one strategy, get good at that strategy for at least 2 years, then before moving on to the next one. So don't be that person. If you really want to get results fast, I would say stick to one strategy for at least 24 months. Alright, if you're enjoying this video, please make sure to comment below. Let me know what you like about this video. Let me know what is running through your mind. Also, share the mistakes that you've made in your journey. Either you are still an aspiring investor or you already have your investment property. Make sure you share them below. I would like to chat with you. And that takes me to number 8. Number 8 is that new investors don't ask for help. Yes, they don't ask for help. They think they can figure everything out themselves. They think it's part of investing that you do have to figure everything out by yourself. That is far from the truth. You do need to ask for help. Real estate is a team business. It's a team effort. That's why you have your real estate agent, your lender, your contractor, your appraiser, your home inspector, insurance agent, real estate attorney, real estate CPA, among other real estate professionals. So don't try to do it alone. If you're new, your best buddy will be your real estate agent and your lender. So these two people will be very, very crucial to your success. So if you're new, don't be too afraid or too proud to ask for help. Always ask for help and you'll be glad you did. The number 9 on my list is that not understanding the difference between ROE versus ROI. Now, ROI is return on your investment. The ROE is return on your equity. So if you bought a property for 2-3 years, you will have seen that between that 2-3 years, there will have been some equity in that property. So not making sure your equity is working as hard as possible for you, it's a mistake I see rookie investor make. So what you can do is that get an appraisal after 5 years and see how much does your property worth now. And you can try to refinance to free up some of the money and reinvest that money. Or if you know that even if you reinvest the money, you will still not be getting a good return on your current property, then you can consider selling the property. So make sure your return on equity is working hard for you as compared to your ROI. So some property will definitely outgrow some neighborhood or some kind of geographic area. So make sure you sell those property or you refinance them to free up some money to go and invest in another place. So don't make that mistake. Now, the last one on my list is not working with an on-fire agent. A lot of people think real estate agents are the same. They are investor agent, they are conventional agent, they are luxury agent. You know, agents they come in different shades, and you need to make sure the agent you're going to be partnering with to work with you on your journey to acquire your first or next rental property or any kind of investment property. Make sure they are investors themselves, because there is no way that person can help you if they don't even know what you're looking for, or if they have not walked your shoe before, or they don't even know how the kind of lingo, what is going on in real estate investment world. So don't make that mistake of thinking all real estate agents are the same. They are not the same. So make sure your real estate agent is also an investor themselves, and they are very experienced with the kind of assets you're trying to buy. So these are my 10 things I'm going to tell you to avoid as a new investor. If you like it, you find value in this video, make sure to subscribe to my channel. I do release other content that I believe will definitely benefit you. And comment in the section below. Let me know what you like about this video, what you think could have been improved on it, and what kind of video do you even want to see in the future. Thank you, and I'll see you in the next one. Bye-bye.